Hey guys, it is Julie here with TipRanks, and today we're taking a look at two perfect 10 stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. I hope everybody had a great Thanksgiving weekend and maybe took some advantage of some Black Friday sales. Speaking of which, TipRanks has extended their Black Friday sale for Cyber Monday. So for the next day, you can get 45% off premium research tools. If you've been wanting to take your investment research to the next level, now is a great time to do so. So head over to the TipRanks website now. Today, we're going to be taking a look at two stocks that score a perfect 10 out of 10, and this is on the TipRanks Smart Score, which looks at 8 unique factors to determine a stock's likelihood to outperform the overall market. So we're going to take a look at these companies, what it is that they do, and of course, what Wall Street analysts are predicting for the stock's future. So let's get right into these two 10 out of 10 stocks. First on our list today is CELH Holdings. Their stock trades under the ticker CELH, currently priced at $54.57 per share. Over the past year, they've seen impressive growth of over 51%, including 31% in the last 6 months, cooling off slightly here in the last 3 months, down 10%. They do score a 10 out of 10 on the TipRanks Smart Score with very positive news sentiment and crowd wisdom. Investors holding the CELH Holdings stock in their portfolio has increased 15% in the last 30 days and 18% when looking at the top investors. CELH might be a name you recognize from shelves at the store, as they are an energy drink company. They bill themselves as a partner for consumers' active lifestyles, and their products do not contain any aspartame or high fructose corn syrup. They boast that their drinks and supplements provide a full range of essential energy to boost metabolism and burn body fat. While designed to give consumers the extra lift they may need at the gym or during outdoor exercise and activities, their products are also useful during the ordinary workday. CELH just shared their third quarter report near the start of November, and they came out with a solid earnings beat, but also record revenue. For their third quarter, their earnings per share came in at 30 cents, which was well ahead of the anticipated 17 cents per share, and they reported revenue of $385 million, which was up 104% year over year. The company also saw their gross profit come in at $194 million, which was up 147% year over year. Recently, initiating coverage on the CELH stock is an analyst from Jefferies. And they think the key to this stock lies in the company's overall niche potential, writing that CELH's opportunity should be framed in the context of a much bigger energy plus category versus just energy. They think that CELH's position as a fitness lifestyle brand enables the company to benefit from the overall category tailwinds, and they expect sales to grow over 39% through 2027. The CELH Holdings stock has attracted the attention of 13 Wall Street analysts, coming in as a strong buy with 11 buy ratings and 2 holds. And with an average price target of over $72 per share, they're anticipating future growth of 32% from current prices. Down below, we can see those recent ratings all coming in following that last earnings report. On the low end, we do have a hold rating, still with an upside of 19%, and a high-end price target up above 32% from that Jefferies analyst, and another here from a 5-star analyst at B. Riley with an upside of over 52%. Our second 10 out of 10 stock today is one that we've actually talked about in the past as well. It's a company called Aercap Holdings. Their stock trades under the ticker AER, currently priced at $66.84 per share. In the past year, they have seen overall growth of nearly 13% there, gaining over 15% in the last 6 months and a 9% gain here in the last 3. Their 10 out of 10 Smart Score comes with bullish blogger sentiment and increased hedge fund activity. They've increased their holdings by 9.2 million shares in this past quarter. Aercap Holdings is an aeronautical firm based out of Ireland that occupies an interesting niche. Aercap is the leading company in the aviation leasing industry. They are the world's largest owner of commercial aircraft, and they lease these aircrafts to carrier airlines. They have an impressive portfolio of aviation assets, including more than 1,700 commercial aircraft, more than 300 helicopters, and 1,000 aviation engines. Aercap works with airline carriers to lease their equipment, allowing carriers to keep their planes flying, but giving them flexibility to alter their fleet composition when conditions demand. They shared their latest quarterly report near the end of October, where they had solid results, beating on both earnings and revenue, plus increasing their full-year guidance. On October 27th, the company reported earnings per share of $2.81, coming in comfortably ahead of estimates of $2.38 per share. Revenue came in at $1.89 billion, which was up 10% year-over-year, and they raised their full-year adjusted earnings per share guidance to approximately $9.50. The company also authorized $500 million in share repurchases. The most recent analyst rating for the stock came in a couple of weeks ago from Barclays. They said their positive rating on the shares is supported by the company's strong cash flow profile and their unique capital return strategy. The leaser model is benefiting from both cyclical and secular tailwinds that should improve leasing returns going forward, and Aercap's leading market position as the world's largest lessor should allow it to generate above-average returns over time. Aercap Holdings does just currently have 6 analyst ratings, but they all come in with a buy. And that strong buy consensus comes with an average price target of over $82 per share, which would be a growth potential of 23% from current prices. Down below, we can see the recent ratings coming in following that earnings report. We actually have 4 out of the 6 all coming in at $80 per share, which would be an upside of 19%, and a high-end price target from Goldman Sachs with an upside of 40%. So that is a quick look at 2 stocks that score a 10 out of 10 on the TipRanks Smart Score and also come in with a strong buy consensus from Wall Street Analysts. So let me know your thoughts on these 2 companies in the comments down below. Do either of them catch your eye, or what other stocks have you feeling excited lately? I always appreciate hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, just keeping you up to date with what those Wall Street analysts are looking at and providing some insight and entertainment. So please make sure you're always doing your own research and due diligence before making any investment decision. Thank you guys so much for watching. Don't forget to take advantage of that Cyber Monday sale, and I'll see you back here next time.